Ladies and gentlemen, good evening. Thank you for tuning in. This is Christopher Aaron. It is the 29th of November, 2017. And in addition to updating the recent price action in gold and silver, we are going to cover a doozy tonight. And that is the question, is Bitcoin a bubble? I've been waiting to make this video for an appropriate time. I've had a lot of questions on Bitcoin over the last number of months. And we're going to actually tackle that question with some specific examples, looking at other bubbles in the past and comparing it to the chart of Bitcoin. And understand this from the beginning. This work is technically based. So I am generally not discussing the fundamentals for any of the markets that we are talking about here, but we are examining things from a technical basis. We will look a little bit at the fundamentals, but I do not claim to be an expert in the fundamentals of blockchain technology. The reason why I don't focus on the fundamentals, so think about it from the standpoint of the precious metals. How many fundamental arguments were given in 2011 as to why gold was going to go higher to 2,000 or 5,000 or 10,000? How many fundamental arguments were given in 2012 and 2013 as to why silver was going to go to $100 an ounce, right? All these fundamental based arguments, they can be very convincing, but ultimately they have no weight. They are one person's fundamentals. So what I like to do is to boil it down to the only thing that in my experience has ever given anything that we can really hang a hat on, which is the technical action in the markets. Let us begin. We're going to look at gold and silver here briefly. That is the purpose of this channel ultimately. We see the weakness coming in to gold today, failing to get above 1,300. Really stuck within those recent ranges that we've been talking about. I will say this, nothing has changed from the technical standpoint with regards to gold. This is one of those times where there is a range of prices that can be acceptable within the technical model. And I would not be surprised to see gold dipping a bit lower here before this retest process is finished that we have been discussing for the last number of weeks. We are still in that retest process. Very, very healthy long-term price action to be getting involved with at this point. Silver here acting weaker than gold on a relative basis. We have a range that we're looking at for support to emerge here between the prices of $15.70 on up. So silver is getting back close to that range. You're in a good buy zone here. Really from the long-term perspective, anything in the teens are going to represent excellent value when we look back within a few years, although this is very frustrating for those who bought in 2011, 2012, and 2013. I understand that. But we see a lot of indicators right now showing that this market is close to being washed out to the downside. We see a lot of the miners that have been falling recently over the last few weeks. We see them not really falling very much anymore, especially on these drops in silver. It looks like the sentiment is about as washed out as it can be as far as the precious metals. We'll look at more of the precious metals charts coming up next week. So briefly, we're going to get into this topic here of Bitcoin. Is Bitcoin a bubble? And you need a little bit of a backdrop as to the way that I approach markets and the combination of the psychological, the fundamental, and the technical backdrop for this. So here's a chart courtesy of a Dr. Rodriguez here, Global Studies at Hofstra University. I'm not saying everything on this chart is 100% perfect. No chart is. But I think this is a really good chart to look at the technical price action as it overlays with the psychological backdrop for markets as they enter a bubble type of state. And we see here a what is called smart money or institutional investors or early investors, smart money being early investors, people who were looking at Bitcoin, for example, in the late 2000s or in 2011, 2012, 2013, 2014, right? When no one was really talking about it. This would be the smart money, and the price was not moving all that much over the course of those years. And then you start to get into a bit of an initial rise. This happened over the last couple of years. And then this parabolic blow off here that we've seen, and I don't want to call it a parabolic blow off. Excuse me, that term was too soon for me to say that, because it is quite possible that the price of Bitcoin may go a lot higher than it already has. So we don't want to call a top before we see technical action that indicates a top. But we have these emotions here that come in with the technical action of a parabolic move higher. And we have, for example, media attention, enthusiasm, where prior there was no enthusiasm. We have greed, delusion, and what is called a new paradigm at the very top. So this new paradigm, another way that we can phrase this is the phrase here, this time it's different. So this is a phrase that we will see repeated over and over again when we study the history of these bubbles. And this phrase pops up basically every single time. There is always a reason why this time it's different at the very top of a market bubble. We have something like this sentiment showing up, which marks the top, and then we have a quick initial drop, a bull trap. The bulls are convinced that this is a normal return to a normal market, as if all of the gains of the bubble will stay forever. And then we have a serious drop after that, which results in fear, capitulation, and despair. Basically bringing us all the way full cycle back to the long-term basing process. So that's the important thing to keep in mind here. Let's look at a few examples of this. This time it's different. So keep this phrase in mind as we look at this. We're going to bring up the chart. Now I have blocked off the name and I've blocked off the price action here. We are going to look at some historical examples of bubbles. So this one, let's look at it. Whatever this was, now students of history, especially with the precious metals, are going to know what this is right now. But if you've never looked at this time period in history, it's absolutely fascinating. So let's look at it. Whatever this market was, in 1974, had a first initial rise up to the $6 mark. We could see that. We're going to call this the long-term base. Okay, first initial rise up to $6 per share, per ounce, per bushel. It doesn't matter what we're talking about. The point is 6 is the number that this is valued at. Then what do we see? 1, 2, 3, 4, 5.5 years of basing between 4 and 6. So up, down, up, down, up, down. Very frustrating, very frustrating. And then what do we see? The takeoff above the long-term base. And in 1 year, moving from 6 up to 49. So for 5.5 years, it moves flat. And we have a bit of a minor support level here, seen at the $14 region. And in 1 year from the takeoff here, beginning of 1979, what do we see? The move from 6 up to 49. This is roughly, using round numbers here, roughly an 8-fold gain, which is equal to 700% in 1 year. Now, if we had a nice long-term base here, this is showing the market was in equilibrium. Demand was more or less equal to supply. This market was able to supply everyone that needed the product. and something changed in a dramatic fashion. Now, anytime we see, this is a technical basis, anytime we see a market that bases like this and then just goes parabolic with a percentage gain like this in such a short amount of time, the technical point is that this is unstable. This is not a healthy market. This is great if you were buying here toward the end of the base and you're able to cash out close to or at the top. The problem is that in a bubble, most people never cash out. Because why? They believe this time it's different. So let's get rid of this and see the result here. What was the market? This was silver. This was our beloved silver that we focus on here on this channel. We can see, and this was a bubble. We can look back at this price action and see that the loss in value, the bubble deflated back to the prior base. So back to this $5 per ounce region. In other words, it lost 90% of its value. So coming all the way back down. So anyone who bought after this 1979 breakout here lost as a net sum if they did not sell. And once again, the point is that most people do not sell in a bubble because they believe that this time it's different. And what was going on at this time, it's, you have to think about the psychology of the markets. So we had here, what was happening in 1980? Inflation running at 15% per year. This is what was admitted by the Bureau of Labor Statistics. 15% per year. Interest rates on bonds were paying 20% per year in interest. We can't even imagine this right now. People thought the dollar was going to fall to, to zero, hyperinflation, everything. It turned out to not be true. So silver peaked here in 1980 and very interestingly formed this candle right here. And we're looking at a weekly candlestick. This upper wick, you can see this black wick here is called a gravestone doji. Gravestone doji is where it opens at a level, spikes up really high, and comes back down. And it's called a gravestone doji. Doji is the word for one candlestick representing 1 week of price action. It's called gravestone because it looks similar to a gravestone, literally, as you would see with the long upper body for the headstone right there. These types of candlesticks represent the possibility for a top. And when you take that into consideration with the prior parabolic move, 700% in 1 year, whereas flat price action for 5.5 years before that, gravestone doji, there was the top, there was the bubble. Now, this price action was eventually met again. So it was not a bubble that was never matched forever, but it did take 31 years for the price of silver to get back to this $49 level. So in the short run, this absolutely was a bubble, and we can see that. Let's look at a very interesting example here. This is a backdrop showing this was printed in one of the newspapers, showing a bubble that formed almost 300 years ago. Quite fascinating when we look at this example. We're talking about 1718 to 1721. And we're looking at the investing career here of Isaac Newton. And we're seeing the price level, a long basing process like this, right there. And we are seeing something of a parabolic move here. Also an 8 times gain, 700% in 1 year. Any guesses as to which market this is that we are referring to here? Let's reveal the results here. Any sort of 700% gain in just 1 year is unsustainable. Completely gave back all of the results. We are talking about here the South Sea bubble, showing his nightmare how he ended up broke. And once again, it's very interesting to think about what was happening here. This time it's different. What was happening as this bubble was going on was that a company from London was investing, basically opening up the market to South America. So think about this. From the perspective of a company doing business for the first time in history in South America, you have an entire new continent that is being opened up for development. Anyone investing in this and seeing their gains, 100%, 200%, 300%, is thinking, of course, this time it's different. Because we've just discovered a business opportunity with a new continent. Who knows how many millions of people live there that we can do business with for the first time. And that was true. Fundamentally, that was true. But the point is that these charts, when we see something like this, a long base and a parabolic move higher with a gain like this in 1 year, even though those fundamentals may be true, this type of price action is unsustainable. Even though, yes, in the long run, look, anyone who invested in South America in a more diverse way, going back into the 1700s, I'm sure they made fortunes. It's just that we can't pick any one entity at a specific point in time and say that this is the way. The truth is there's going to be multiple ways that people gain and lose wealth through investing in a new paradigm, a new type of market. Well, let's bring it to This Time is Different, part 3. This was the point of this video. What are we looking at here? We'll reveal the market in just a moment. We are looking at a long-term base. Remember that long-term base from the silver chart. So this base was 1, 2, 3.5, almost years. And we are looking at some minor support levels here that have shown up along the way. Very minor support levels. And we are looking at, it's amazing to see this percentage repeated over and over through these major bubbles. 700% gain here in less than 1 year. A chart that has formed a long-term base and has gone completely parabolic. And this time it's different. Why? Because we're talking about Bitcoin. So here's the chart. The chart looks very similar to the charts that we have just looked at. The psychology right now is very similar. This time it's different. Why with Bitcoin? Because it's a new currency. It's decentralized. The central banks don't control it. There's a limited supply. Fill in the blank. All of these fundamentals may be true. I'm not negating these fundamentals. But remember the fundamentals that were true when a new continent was discovered for investment purposes in South America. Remember the fundamentals that were true for silver investors in 1980. What fundamentals do we believe are true with Bitcoin right now, whereas the technical price action of the chart is showing something that is completely unsustainable? So this is one of those times that I am going to give my best assessment from a technical standpoint. What are we seeing here on the chart? This is an unsustainable parabolic move. This is not to say that cryptocurrencies as a sum may not have an important role in the future of the world economy, but this chart for Bitcoin is completely unsustainable. And my take on it is that we are going to see a deflation of this bubble-like psychology and price action back to the long-term base. Similar to the other bubbles that we saw, I do believe that the technical and psychological backdrop of Bitcoin at this moment is indeed a bubble. Once again, that does not negate the positive fundamentals that may exist for the cryptocurrencies in the very long run. Another interesting thing here, we see this is a weekly candlestick chart. Once again, we see the gravestone doji, very similar to what happened in the price of silver at the peak in 1980. We have the same percentage gains here. It's incredible to see how these patterns repeat over and over in different markets. Why? Because markets are the sum of human nature. Human nature does not change throughout time, at least when it comes to the capital markets. I do believe that we are progressing as a species in some other ways. We'll get into some of that in the future. But when it comes to the capital markets, human nature does not change. So that's why these price levels here come in. Now, what do I think is going to happen? I think this is going to be rather swift. That Bitcoin comes back to the level between 300 and 1200. It's quite a wide range, but we're talking more or less a 90% drop from current levels is what I think will happen here over the course of the next year. And you can quote me on this one. That'll be fine. We'll come back and we'll visit this a year from now. And if I happen to be right on this, I would just say that then keep your mind open to the possibility that technical analysis does work sometimes. So what would I do if and look, first of all, I do not hold Bitcoin, nor am I short Bitcoin. I am as much of an outsider as you could be. So I have no financial interest in it either going up or going down. Will I buy Bitcoin if it comes back down here? Maybe. So you could say, okay, I have a partial financial interest in it coming back down. But it will never represent a significant portion of my holdings. So I'm stating this from a technical and a psychological backdrop only of what looks like a bubble when we compare it to other examples. So if I did, this is a question I get a lot, if I did own a significant amount of Bitcoin, what would I do right now? I can't tell you exactly what to do, but I can say this one thing. If you're sitting on profits right now, and you are looking at this kind of a chart, no one has ever gone broke by taking profits. If Bitcoin keeps moving higher, what? 12,000, 13,000, 15,000 over the next couple months, okay. You could decide whether or not you want to buy back in with a portion of your profits. But at least if you take some of your profits now, you will never look back at this market and say, man, I didn't profit at all from that Bitcoin early stage rise. It's nice to lock in profits sometimes. That's all I'm saying. Thank you very much for watching. I hope there's some food for thought with this one. Oh, and let's look at another one. Just another example that I had here. This is a very interesting example. So for people who are saying, no, but really, this time it's different. Really, because this cryptocurrency is completely new. It's going to revolutionize the world. Remember what people with 3D printing companies were saying just 3 years ago. Looking at the parabolic rise here in this company called 3D Systems, the psychology at the top was that this is going to absolutely change everything about the world that we live in. We're going to print our furniture. We're going to print mouse pads. We're going to print our food. This was the psychology at the top. And so everyone was buying into this fundamental theory. Of course, this may end up being true. We may end up printing everything that we own one day. But the participation by one company, the idea that one company is going to do this, and that this is the company, and that it's all happening right now, no. So if you were not taking profits as you were noticing, and look at the percentages again from the breakout around here, around 10 up to 95 or so, you're talking almost that same percentage rise. If you were not taking profits here on the top, you rode it all the way back down. Congratulations. This time it's different, except you didn't make a profit off of it. The type of analysis that we do here is what goes out to premium subscribers. It's this type of analysis. If you've enjoyed this format, we do videos like this once a month related to the precious metals. We also cover the GDX, the individual miners that we are buying and selling here, and all the research to back that up. You may find more about that on the website. And the reason why I am focused on the precious metals right now is because the metals are basing. It is generally not advisable to chase markets higher that are in parabolic blow-offs, as we see in a lot of these examples. You want to be investing generally in markets that are nearing the end of a basing process, because those are the markets that then stand over the next several months and years to start moving up strongly. You want to be part of that smart money, part of that early buying that we were looking at from the psychology chart. So this is why I'm focused on the precious metals, because all of my research shows me that gold and silver especially, yes, but also the mining sector is the cheapest that it has ever been valued in 40 years of record keeping that we have. So if you can't look at that and say that there is a value proposition, then I'm not sure what you can look at and look for value. So it certainly can be volatile over the short run, but that's why I'm focused on this segment of the economy at this time. I was not saying to buy gold and silver in 2012 or 2013. There are no videos nor articles produced from me at that time. There's a reason why I waited till late 2015 to start publishing this research. If you are new to the precious metals and you would like to speak one-on-one about your situation, I do work with individuals on an hourly basis to come up with strategies, buy, sell strategies, investment strategies, based on your individual need. You can find more about the consultations on the website. I do thank you very much for tuning in today. There's a link below to a dealer that I work with that is called BullionExchanges.com. You can buy from them. You can sell to them also if it's time for you to sell. These are guys that I trust. I've been to visit them. I know the owner. I know the shipping department. There's a coupon for $10 off your first order, link below, if you would like to try them out. Thank you, and I'll see you this time next week.